In this video, I'm going to show you a simple and effective way to use time frame alignment and top-down analysis, not just to get a high win rate, but also massively benefit your risk reward. And most people use it the wrong way. They overcomplicate it. And so first, let's go over how exactly you should be using timeframes in your trading. So all timeframes actually show the same thing, but just in different amounts of detail. You should already know by now that higher time frame candles are just made up of lower time frame market structure. So just think of time frames as showing you different resolutions of price action. The higher time frame you go, the lower the resolution you're looking at, the more simple that price action will seem. For an example, we are currently on the 1 minute chart with an hourly candle overlay. So we can see on this hourly bearish candle here that there is 1 minute structure making a new high into breaking this structure here to making a new low. But this is just a simplified version on the hourly chart. So we can see the clear high and the clear low as a kind of simplified version of these 1 minute highs and lows. So as all timeframes show the exact same thing, just in different amounts of detail, timeframes are almost kind of like meaningless. You shouldn't really be focused on, oh, I'm looking for direction based off the 4 hour or the daily, and then entry based off like 15 or 5 minute. You should be thinking about duration of price action. When you're taking a trade, you shouldn't be thinking about, I'm taking a 20 pip, 30 pip move, I'm taking this move. You should be thinking about trading that duration of time. So for me, I don't focus on a 10 pip move. I focus on trading the next 5 to 10 minutes. The most important factor in trading is timing. So timeframes are kind of second to that. I think about the duration of price. So low time frame for me would be the past 15, 20 minutes of price action. Middle time frame is the past 4 to 5 hours of price action. High time frame would be the past days of price action. I'm not focused really on those timeframes as they all show the same thing. I'm focused on the durations of those timeframes to then, build my bias and align different timeframes for entry. So quickly before we go into how to align different durations of price action, aligning the low timeframe direction with high timeframe direction or middle timeframe, let's go over how do we actually identify what direction is, because a lot of people have a big misconception around actually how to identify that is. Simply, direction is just defined by highs and lows. If you're making higher highs and higher lows, you're making bullish market structure. If you're making low highs and low lows, you're making bearish market structure. Pretty simple, pretty easy. But then how do we shift in between bullish and bearish structure? Well, simply by looking for those shifts where you go from breaking a low into breaking a high and vice versa. So I'm simply just looking to trade. This is my favorite entry model, a shift in market structure. Very simple, very easy. I just look to enter after a pullback when market structure is shifting from bearish to bullish for buyers and vice versa for sales. So we're going to go over how I just use one simple entry model, a market structure shift, and look for that across different timeframes, not just to find direction on higher durations of price, but entries on lower durations of price. So you can use one pattern, one entry model across all different timeframes to have an extremely high win rate and extremely high risk reward. So just a quick example of what this kind of looks like. It's just a shift within a shift. You're aligning different durations of price action, low time frame with middle time frame with high time frame, just by looking for one simple entry model or pattern. So looking for a low time frame shift with a high time frame shift. It's really nice to refine entries and to stack probabilities in your favor. So we'll go over some trade examples of exactly how this plays out in real market conditions. Okay, so for a trade example here, we can see we are overall high time frame bearish, but we've had this middle time frame shift in market structure. In the past couple of hours, 4 to 5 hours of price action, we went from pushing bearish, creating lower highs and low lows here. So lower highs and low lows to breaking this high here. And then coming back. So this is a middle time frame market structure shift in the last 5 hours of price action. And we can further refine this to look for buys. Even though it's against high time frame, the only time frame that should matter to you is the one that's most relevant. So because I'm trading low time frames, the next 5 to 10 minutes of price action, high time frame is less relevant than middle and lower time frame. So trade the time frames that are most relevant to your duration of trading. So yeah, we have this overall type 3 shift on middle time frame, and right now in a bit of a pullback phase, we're making lower highs and lower lows. Now we have another market structure shift here. So a shift within a shift, where you go from breaking a low to breaking a high, a nice clean type 3 shift. And this also aligns up with this previous hourly close bullish. So nice hourly close bullish, we can just look for, where would we want to enter? There's a previous hourly open close. There's some lows here around here. So we'll just say around this sort of area, we would like to enter for a buy with this shift within a shift. What we can actually do is with a new hourly candle open, we can wait for it to come into this area of interest and have a shift within a shift in that reaction. So we come into this area of interest, we're creating that bottom wick, and we have this previous high here. So previous 1 minute candle high, where we can look for it to, we've broken this low. So we can look for a market structure shift for a shift within a shift within a shift. It's a simple alignment using one sort of pattern. So break a low, break a high, that's what we're looking for. So we break a high here. Not the biggest break, but we do have it, break this 1 minute candle high. So we can now look for a buy with this shift. So if we go zoom in, we even can go into even more detail where we've broken this low. We kind of be looking for it now to break this high, and we can put our stop maybe just a little bit below there for a nice trade. So we have that, we break a low, break a high, and we can kind of test out maybe some recent highs around here. for a pretty nice, simple, easy trade. So this is a lot of refinement. You can just put I recommend putting your stop below the previous 1 minute structure candle low, but we refine that. So these trades tend to be really simple, really easy to take, just by looking for that shift within that shift within that shift. So a simple, easy way to align different durations of price action just by using one simple pattern or entry model. So this middle time frame entry model can be used for direction for this lower time frame entry, I guess. So all time frames, all durations of price will move the exact same way. And you just want to trade that accordingly. Okay, for the next trade example here, we can see that we've actually had now a bigger shift in market structure. So the previous trade we took was kind of around here, that little buy, but that's ended up being an overall bigger shift in market structure. We were making lower highs, lower lows. Now we're making higher highs. We've broken this high here. So just like how we'll be looking for a usual shift in market structure, you first want to wait for it to pull back into around previous lows or previous highs to then continue push bullish. So waiting for it to pull back into around this sort of area to then react off that and push bullish. So simply we want to have a shift here in that overall bigger shift for an entry. So okay, so now that we've pulled back into our area, now we're going to look for an entry. So we are still making lower highs on low lows on lower time frame. High time frame is bullish, but we want to wait for low time frame to align with that. So we have this break at this high here, shifting bullish. We've taken out a low, taken out a high. So pretty clear market structure shift to the upside. What we can look to do is wait for it to pull back into this little area here. So it's not always going to pull back, but hopefully it does. Okay, we've had it pull back into this area for that little low time frame market structure shift. But we've also had this lower time frame shift bearish here. So lower time frame had this bearish shift. So when we have these 1 minute candle highs, we've broken a low. We're waiting for that to shift bullish. So yeah, we have that. We've gone from breaking a low to breaking these highs, and we can look for an entry. Maybe just add this 1 minute candle. We can put our stop behind the previous low. We've waited for 1 minute structure to shift bullish. It's no longer moving bearish here. And so let's see how this moves. So pretty nice, simple, easy. Because we're aligning lower time frame with higher time frame, it tends to move with that volume, and pretty nice, simple, easy trade. We still have middle time frame moving bearish. You'd only really have middle time frame pushing bullish if you broke this high, if you had this big overall type 3 shift here. So you can go on to our last trade example where we wait for low time frame, middle time frame, and high time frame to align. So this past trade was just low time frame and high time frame. We're still waiting for middle time frame here to align with this overall high time frame push bullish. So let's wait and see if we can get a nice middle time frame shift in market structure. Here we go. We have a big shift here where we broke this high. Now we're just waiting for a bit of a pullback. So exactly how we're looking for on the high time frame, we're waiting for it to pull back into this area. We have it a pretty nice, decent reaction here where we go from breaking a low to breaking a high here. So we can look to take an entry around this sort of area here. And we can refine that into a bit more detail, but you can take an entry. We can put our stop below maybe this 1 minute candle. I'm thinking around here actually. We have a middle time frame shift here. So middle time frame shift. We have our higher time frame shift here, and then we also have our lower time frame shift here. This is looking like a really nice, easy trade for it to expand upwards. Because we have all 3 time frames aligned, you can hold this trade a lot longer instead of just having low time frame and high time frame aligned. So plays out pretty nicely. Even here, we can see you have this little bit of a structure shift where you go from breaking a low to breaking a high. You can enter that this pullback, and we go from breaking a low, breaking a high, do that shift. So you can go into as much detail as you want, a shift within a shift within a shift, because price action is fractal. It moves the same of all different time frames, and I find the best trades is when I'm using this simple entry model, but aligning that across different durations of price. We'll see how this continues going, and yeah, it moves pretty nice, pretty you're not always going to get this. It takes a long time for these trades to set up and play out. It's very rare that you're going to get low time frame with middle time frame with high time frame. But this is just an example, an extreme example, just to show you that if you just use one simple basic pattern, a shift in market structure, but you align that across all different durations of price action, you can get a really nice trade to play out in your favor. So I hope this helped. If you want anything else covered in the next videos, just drop a comment, and I'll catch you guys later.